Joining us now is Mizuho Securities James Lee, who has a buy rating on the stock, raising his price target from 135 to 145 after the company's results. James, great to have you with us.
Great. Thank you for having me.
You know, when I talk to investors about Amazon, their number one issue with this company is the valuation. And that was even prior to the earnings. And now with the earnings out and seeing the slowdown in cloud is continuing in April, how do you justify to your clients the valuation priced for high growth when we're not necessarily seeing that right now?
Okay. A good question there, Melissa. I think valuation right now is not very stretched at this point in time, right? We value the stock based on 2-year forward EV to EBITDA. And traditionally, we're seeing Amazon in the range to mid to high teens. And at the current price right now, you're probably trading around 10 times forward EBITDA, right? With the fundamentals being positive on retail business, they did a really good job on expanding margins on retail by driving efficiency on their fulfillment centers. At the same time, they're cutting their headcount as well. And also AWS, even though we're seeing deceleration into next quarter, we're projecting about 10% growth. We're pretty close to the trough with potential recovery towards the end of the year. From that perspective, we think the risk reward from the valuation and also from the fundamental inflection point of view is actually very attractive. So we like the stock here.
Given that we've heard from all the major cloud players at this point, James, and yesterday on the conference call, the CFO had made some commentary to the effect of we're not seeing a shift in balance amongst the major cloud players. What's your takeaway here? Hearing what Amazon is guiding about April, but also hearing what Microsoft and Alphabet have said.
Yeah. I think one thing an investor needs to keep in mind is that Amazon runs a consumption model. So in a down economic cycle that we're seeing today, you're going to have a double negative leverage effect in terms of pricing and volume. But when the economy starts to rebound specifically, we should see that benefit translate into Amazon's revenue growth. So in the short term, it does look like they're losing market share against peers, but I think structurally they're actually not.
Hey, James, interesting takes this morning, really through the lens of Microsoft. Bloomberg says that Nadella rightly smells blood in his quest, not just to dethrone Google on search, but now also Amazon through AI and take a crack at maybe gaining some share against AWS. I just wonder if you think they are the white rabbit at this point.
Yeah, that's a very interesting point here. And that's a key debate for investors right now besides market share. What about Amazon's position or AWS position AI? I thought management did a good job defending their position on the call. They lay out two differentiators on the earnings call. First, they're using their own chips to process Gen AI. That means their unit economics could be much better than peers. Number two, they are allowing, enterprise in AWS to run their large language model. That means, they could potentially pass the savings or cost saving to clients, and that will allow them to have a better pricing in the market. And lastly, they can use their large language model to enhance applications on Alexa. So from that perspective, I thought they did a good job laying out, how they are positioning on AI. And if you think about Gen AI right now, it's still in very early days of development. So I don't think Amazon's late to the party. There's still a lot of opportunity for them to gain share. I think one important thing they decide to do consciously is, allowing customers to, number one, extend their contract to long term and to save money in the near term. What that does, keep customers on the platform and allow them to capitalize the opportunity in AI long term.